Hello trade pros. In today's video, I'm going to talk to you about the new micro Bitcoin futures that were recently announced by the Chicago Mercantile Exchange. This is a fantastic opportunity for traders with a smaller account balance and those that wish to trade cryptos to take part in the futures market and finally get access to a product that could give you opportunity for the gain while managing your risk at the same time. Let's jump in this video and I'll explain to you everything you need to know about the new micro Bitcoin futures in comparison to the existing contract, and we're going to go through an example of how to calculate your potential profit or return by trading these products. Let's dive right in. All right, so first and foremost, these new futures for the micro Bitcoin are coming out on May 3rd on the Globex session. This is a really exciting product and an exciting time to be looking at cryptocurrency trading. A lot of the times you've had to do it on a crypto exchange, but now futures traders could trade this product through their futures account. Our day trading room is ecstatic and something that we're going to be looking for on a regular and daily basis as we look for opportunity every morning. So let me give you an example and first explain to you the new product. What is a micro Bitcoin future? And most importantly, how does it compare to the already current Bitcoin futures product that exists on the marketplace today? So let me show you a quick demonstration. Now let's pull out our handy dandy whiteboard. All right, so I've listed a few categories that we're going to compare the regular Bitcoin futures to this new micro product. First and foremost, the symbol for the current big size Bitcoin futures is BTC. For the new micros, the new symbol is going to be MBT for micro Bitcoin. All right, this is the new symbol that's coming out. For the second column, this says contract size. That means how many Bitcoins are you buying for every futures contract that you purchase. Under the current big size Bitcoin futures, you are getting 5 Bitcoin for every one contract. The new micros are extremely scaled down and give you access to just 1/10 of a Bitcoin or 0.1. The next row here is tick size. And what this means is, what is the minimal increment of price fluctuation for this contract? And that's actually $5 for both. That means that the Bitcoin futures will move 1 tick when Bitcoin itself moves at least $5. This is very important, and we'll use this a little bit later on when we calculate our profit and loss under a given scenario of a $100 move. The next thing is tick value. How much is this minimal increment worth? On the regular Bitcoin contract, the tick value is $25 per single tick movement, whereas on the micro Bitcoin futures, this is going to be just 50 cents. So right away, you can see the advantage of these micro Bitcoin futures is that the movement is just 50 cents on a tick basis. This allows you to minimize your risk and also setting a stop loss to a level which, although being stopped out would hurt because you lose the trade, it won't do a lot of damage to your account balance. This allows you to control risk exposure and to also get into trades numerous times a day while protecting your capital. Of course, the return is going to be much smaller as well, but professional traders make money by managing risk. Returns come to risk managers and only amateurs chase gains. Remember that as an embedded tip in this video. In the next row, let's talk about the hours of operation for the new micro Bitcoin futures. And the good news here is they're the same as the existing Bitcoin futures contract. Both of them open Sunday at 6 p.m. Eastern for trading. The open time is Sunday, 6 p.m. and they close the following Monday or the next day at 5 p.m. Eastern. There is then just a 1-hour break between 5 to 6 p.m. Eastern, and they open again Monday at 6 p.m. until Tuesday at 5 p.m. in the afternoon for 1-hour closure. So this means that the crypto market for both Bitcoin and the micros opens at 6 p.m. on Sunday and closes at Friday at 5 p.m. Eastern time, all around the clock, 23 hours a day, 5 days a week. Now, I know the crypto market is open 24/7, and so this is something you want to consider when you're day trading futures on the cryptos, because if you're holding overnight, and gap risk if you plan to hold over the weekend. So I think this product is fantastic for day trading, but you want to exercise caution if you plan to buy and hold for the long term, especially while the market's closed. The next row down I want to talk about is the list cycle. Futures trade on an expiry basis. These contracts do expire, upon which time you could roll it forward to the next month. So the way the expiries work is they're actually monthly expiries on the listing cycle, and they expire 6 months out. So it's the present month plus 5 other months of expiry for these new Bitcoin. So for example, this video has been recorded in April. So you could purchase a futures contract for April, May, June, July, August, and September of 2021. Also, you'll have December of 2021 plus December of 2022 of the following year. So the listing cycle is 6 months plus 2 of the next Decembers, which gives you a lot of option on how you want to hold your positions and how you approach this market with your trading strategy. This is a really exciting expiry, but both contracts share this among themselves with both Bitcoin and the micros. The next thing I want to talk about is the margin. Presently, the margin for a Bitcoin contract is around $117,000 USD. This is a tremendous amount of money, and this is why institutional traders are mainly the ones hedging and getting into crypto exposure through the use of the full-size Bitcoin market futures. However, these new micros allow the retail client to do the same, to get exposure to Bitcoin in their futures account. So what is the margin gonna look like? With a 60% margin cushion, at the moment, the calculation as of this day is around $2,300 to $3,000 US. In futures trading, there are margin requirements set by the exchange, which is set at 60% of the contract value. And there's also margin requirements set by the broker. A lot of the times, brokers who are new into the Bitcoin futures trading industry will actually set margin requirements slightly higher. Ask your broker at the end of the day what your margin will be on the micro, because that's what you're gonna be paying, or the amount of money that you have to put down to open one contract. Your broker is the best source of information for this, but the exchange had set it at about 60% and will maintain that margin requirement. So go to your broker and ask them, what will you be charged for margin? How much money will you need to put down to open one of these new micro contracts? But it's presently around $2,300 on average. The last row I want to talk about, and it's actually below the video clip, is how these contracts are settled. Settlement means when the contract expires, what will happen? Will you take physical delivery of something, like oil barrels if you hold oil futures contracts, or will you actually be able to cash out at a cash position? The good news is Bitcoin is financially settled. This means that whatever your unrealized gain is on expiry becomes crystallized, and you either take a cash gain or loss. So you don't have to worry about taking any physical possession or managing these contracts as closely as you would on other products like commodities, where crude oil is 1,000 barrels per contract. Now, I always advise futures traders to close their positions in a futures contract the week before it expires. This way, you can manage that expiration cycle and choose whether or not to buy the next month contract, or what we call in the futures industry, rolling forward your position. But at the end of the day, what you want to do is to be sure that you get out of your position before expiry. So that's one thing to remember about these futures positions. All right, and that's the new micro Bitcoin futures in a nutshell in comparison to the big contract presently trading on the Chicago Mercantile Exchange. As you can see, contract size is 1/10 of a Bitcoin, the tick size is $5, and the value for that is 50 cents for every $5 movement on the actual cryptocurrency of Bitcoin. So let's talk about now, what would it look like? What would your profit and loss look like under these two contracts between the full Bitcoin spec futures, BTC, and the micro MBT? Let's turn this board around and I could show you that now. And here we are. Let's do the calculation together. I've left it blank on purpose. So here's what the return or profit and loss will look like under a $100 move in Bitcoin on both Bitcoin full spec contracts, symbol BTC, and the micro MBT. First and foremost, if there's a $100 move, all right, what you have to do is divide that by $5. Why do we divide by $5? Because the tick value is $5 per move. Dividing 100 by 5 gives us the equivalent total of 20 ticks. That means in the $100 move, we've had 20 ticks of price movement at the minimal increment on the Bitcoin futures contract. 20 ticks multiplied by $25 per tick on the Bitcoin contract gives us a grand total of a $500 profit or loss, depending on if the $100 move is in your favor or against your position. So this is on the full scale Bitcoin contract. For the micros, here's what an equivalent move would look like. A $100 move is once again $5 per tick. This is something they both share in common, which means that you have 20 ticks of price action. But here's where the difference kicks in. The micros are just 50 cents a tick of movement. Therefore, these same 20 ticks at 50 cents, if you multiply it out, gives you a grand total of $10 USD. So comparing the difference, because the Bitcoin futures full-size contract, every single contract you hold is the equivalent of 5 Bitcoin. A $100 move equates to a $500 profit or loss. This is a 5-to-1 leverage factor, meaning that you're exposed to crypto 5 times for every $1 it moves with the big contract. With the micro, you're getting a $10 move for a $100 move in Bitcoin. Therefore, it's just 1/10 of the value of the full-size move that you could experience. The difference between these two is massive. In fact, the same $100 move would give you 50 times more profit on the regular Bitcoin futures contract versus just $10 on the micro Bitcoin. The good thing, however, isn't that you're going to be making less money. Clearly, everybody wants to be earning on this side of the grid when they're profitable, but losing on this side of the grid when they're losing a trade. Therefore, what you really have to realize is this contract isn't designed to make you as much money as possible. This contract is designed to allow you to control your risk exposure by letting you get into a position with a smaller loss capital and giving you a chance to trade crypto as a professional trader with strong and disciplined money management. And even though you're not making $500 on a $100 move and just $10, the margin you have to put down is just $2,300 of capital versus $117,000. So in our opinion, this is a fantastic product for the futures industry, and we'll start to look at this in our trading room on a daily basis. I really think that this is a godsend to futures traders and a great opportunity for you to consider trading futures today. If you want to learn more, join us in our free trading room at community.TRADEPRO Academy, where every single day we day trade futures for high probability, low risk trade setups. That's what I have for you today. I hope you enjoyed this video. Comment in the section below if you enjoyed learning about these micro Bitcoin futures and if you plan to incorporate them in your strategy. Always remember to like and share this video with your friends and subscribe to our channel and hit the notifications bell for more great content. Until next time, manage that risk and trade like a trade pro. Thank you for watching and goodbye.